Good afternoon, everyone. Thank you for joining us today. Today, we have an investor update with Kiran Patankar, President and CEO of Maple Gold Mines. The company has had some major news out over the past week. And as always, today's presentation will contain forward-looking statements. If you would like to learn more about those, you can find them on the company's website. We'll be doing an update followed by a Q&A session. So if you have questions, you can input them into the Q&A box at the bottom of your screen. And with that, over to Kiran. Thank you for joining us today.
Thank you very much, Magda, and thank you to all of our investors, stakeholders, our partner, and everyone for tuning in. I'm Kiran Patankar, I'm President and CEO of Maple Gold Mines. It's a pleasure to talk to you today to give an investor update. Very grateful as well to Adelaide Capital for hosting. And with that, let's get right into it. We've got a lot of exciting news to talk about with recent transaction announcements over the last few days, including this morning. Forward-looking statements, you're all familiar with these, but we will be making forward-looking statements during the course of today's investor presentation. The investment thesis behind Maple Gold, I think a lot of our longstanding shareholders are aware of just what an incredible land package we have and what an incredible company we have. We've been quiet, obviously, for a while because behind the scenes, since I took over the reins back in August of 2023, we've been working hard to fix this company, fix the projects, evaluate the project, the partnership, and the people to make sure that we are delivering shareholder value. But in terms of what we have to start with, we have an established 3 million ounce gold resource at Douay. We have a past producing high-grade mine complex at Joutel, which was contributed by our partner Agnico Eagle. And it both sit on a 400 square kilometer district scale land package, straddling the Casa Berardi, which is a major break in the Abitibi, and the majority of that land package yet remains significantly underexplored. So there's a lot of blue sky exploration potential. And keep all of that in mind when we think about the transaction we've announced, as well as the current gold price and the state of the current market. Strategically located, the Abitibi is a rich endowment of gold, lots of production in the region, and lots more gold to find. It's a mining-friendly province. It's an exceptional jurisdiction from the standpoint of working with the government, the tax incentives, the history, the knowledge, the vendors, providers, and the labor force. We are also located just off the 109 highway, which is a 2.5-hour drive north of the town of Rouyn-Noranda in Quebec. So we're road accessible with power, et cetera. In terms of what we've done since I took the reins, it really is focused. We've said it a few times, but I'll describe it further here. The value-oriented and data-driven exploration approach is incredibly important, and it doesn't happen overnight. Under the previous teams, and the 2.5 years that we've advanced the joint venture with our partner, exploration has failed to progress Douay and Joutel. We've made progress, we've made strides, but the results have underwhelmed relative to expectations. So I came in here with a very different background in geological engineering, in capital markets, and having run companies. I've got the skill set to look systematically and methodically at what needed to be done. So all along the way, as you'll see with not only the transaction description, the thoughtfulness that we've taken with our partner to creating value via transaction, but also our team, which is exceptional, has done more with less. We've reduced our costs, we've reduced our overheads, we've brought it more in line with the junior company and where junior companies should be. And that again describes, so for bang for the buck and value orientation, using all the empirical data to drive our exploration, that is critical. And then of course, the top tier strategic partner, they've been an amazing joint venture partner. They'll continue to be an amazing strategic partner, and I couldn't ask for better partners in Agnico Eagle. Just to walk through some of the elements on the transaction we announced Thursday and the further update that we announced this morning. With this joint venture restructuring transaction, it's important to note what we've gained as Maple shareholders and what we've given up. So we've regained 100% control of Douay and Joutel, including 3 million ounces at Douay, past producing mine complex at Joutel with lots of exploration upside. We also, importantly, we've gained a path forward to advance the assets according to a timeline that make sense with no near-term dilution risk at the project level. And what does that mean? We have been systematically evaluating the projects in terms of exploration targets that are actually going to move the needle in terms of project advancement, having a development strategy in mind of how do we unearth and unlock value from the existing 3 million ounces that we have at Douay, with grounding in actual mine design and the things that move the needle for our partners such as Agnico, which is really focused on economic ounces. Until we actually have the right structure in place that would enable us to advance the assets, the rest of it is moot. And one of the things that I'll highlight is, in the joint venture structure, it's an amazing thing to be partnered with Agnico. Their market cap is tremendous. That's 45 billion-ish. Ours is 20. So, we could get to February of next year, and we would see ourselves either needing to raise additional capital in significant amounts to potentially fund our 50-50 pro rata share of expenditure on the project going forward. Or on the other hand, if it didn't meet the criteria that Agnico had at the moment, while it's a long-term strategic asset, the project could easily have been parked. It's our flagship asset, right? We need the ability to drive these assets in order to drive share price appreciation and shareholder value. So now we have that ability thanks to the good deal that we've done with our partners. We've got the ability to advance it on our own timeline without near-term dilution risk. Strong alignment, very important. I know I've seen and I've heard spoken with a lot of shareholders that are concerned about Agnico Eagle exiting the joint venture. What we've done was we've taken a very creative and collaborative approach. We mentioned this in our transaction announcement press release, that this was the result of 8 months of hard work amongst us and Agnico, coming up with a structure that actually made sense, not only for the project, but that was a win-win for both parties. And as part of this, this morning we announced that we completed our $4 million flow-through financing private placement. Agnico also made an announcement, as they have to do under Canadian securities law, that they've increased their equity ownership in Maple Gold to 19.9%, and done so at a back-end investment price of 8.5 cents, which is still above where we are trading today. Importantly, I understand the concern of some retail shareholders. It's an exploration business. We're pre-revenue. We have to raise money in the capital markets. The capital markets have been weak despite the strong gold price. When you have a partner like Agnico Eagle and you have the fundamental belief in what we're trying to do, that is how we're able to raise money at a premium. You don't see a lot of premium financings announced in this day and age, especially with the state of investor appetite, despite a high gold price. So we've invested with our strategic partner at a premium. There's no warrants in the deal, and there's a standard 4-month hold period on the shares. Our 2024 exploration programs, which we've been working on, obviously, to determine our targets, and we're going to list some of the things that we're looking at in terms of what we're going to do for the second half of 2024, with a further exploration update and full plan of what we intend to do with the proceeds from this financing. But it's now fully funded, right? Because at the end of the day, what we did was we took the benefit ahead of the changes in the federal government, federal budget, and the capital gains inclusion. We took advantage of the charity national flow-through structure and got a financing announced today before the deadline, which was at a 100% premium actually to our closing price on Friday. So that was done at 12 cents. So $4 million coming in to our treasury actually results in a gross $5.6 million going into the ground because of the refundable 38.75% mineral exploration tax credit. So again, gain and loss. We didn't lose the remaining funding on the Agnico earn-in portion of the JV, which was roughly $6 million. We've traded that for an equity investment at a premium, which will see $5.6 million going into the ground. And then again, on the back end, and the terms of the back end, I understand, are a little bit complex, but Agnico will have to pay if we reach the milestones. We have a project that we believe can drive further value, and Agnico believes is a buildable project. The back end will see the $6 million that wasn't spent under the JV doubled, plus 2 times every exploration dollar and development dollar that goes in from this point until the achievement of the milestone. And at that point, we'd all love to see that happen because we've got a project that's moving forward. We've got growth in the region, job creation, all the things that are benefits. And we've got a partner in Agnico who's world-class at operating gold mines and gold projects such as these. So that's the transaction. Just in terms of updates on where we are, the geology is phenomenal. We are on a major break in the Abitibi that straddles Ontario and Quebec. You have the Detour Lake, Sunday Lake Deformation Zone to the north. You have the Cadillac Larder Lake Deformation Zone to the south. And you have the Casa Berardi Deformation Zone in the middle. The stars are Eagle Bell mine at Joutel and the Douay project with 3 million ounces. Importantly, there's splays on these zones where you see some of the major deposits in the region, which you'd be familiar with, the Detour and the Canadian Malartic mines. There are some very strong similarities here, both structurally and lithologically, which is what originally attracted a partner with the caliber of Agnico to this type of project. So it's a geologically significant area, and the largest gold deposits in the Abitibi are found along these major structures. We control a dominant land position on the middle structure. In terms of the approach, we've got a project development and an exploration pipeline. We've got a wealth of targets that go from generative all across our district scale land position up to a very exciting VMS project that we have called Morris, which our director and technical advisor, chief of the technical committee, Gérald Riverain, is a big believer in. You haven't heard a lot about it, but you're going to hear more about it this summer and beyond. And then, of course, Eagle Bell is a past producer, and Douay with the established resource. So making sure that these are sequenced, that they're properly prioritized, that we're considering risk reward with every exploration dollar that goes in, and that we're seeing bang for the buck is exactly what we are trying to do. And you will notice a difference in approach in terms of how we spend the money, how many meters we intend to drill. This is not, as I've said in the past, we don't drill to put out press releases. We drill to find economic ounces. So while it has been quiet on the technical side for us, it's because we've been quietly keeping to our knitting, making sure all of the data is incorporated into our geologic model, and coming up, which we expect to do very shortly, with a list of targets that actually have the potential to not only expand the existing Douay resource, but make new discoveries across the entire land package. So what have we done? We've unveiled a lot of hurdles that were holding the project back. We took a very systematic approach to improving the efficiency. This includes both cutting the costs at site, as we have done corporately, and also really letting the data guide where we go, as opposed to just drilling holes in the ground. And the result of that is that we have, an improved database, an improved 3D model. We've got modeling brought in-house, database management brought in-house, 100,000 meters of core has been relogged. We've got a roadmap to 5 million ounces, which, as I said, it's a plan. I'm not saying that there's 5 million ounces. I'm saying that we have a pathway to try to get there, because we know it's not just adding ounces that's going to drive the development of this project. It's demonstrating that type of potential, but it's also showing that the ounces that we have are economic. So this may seem like an easy thing to put on a piece of paper, but behind the scenes with the personnel that we've added, some changes that we've made at site, the addition of administrative staff, et cetera, to make sure that we are doing things the right way at all times. This has really been a key part, and I spend every 4 to 6 weeks out at site. I'm a geological engineer, as I stated, so. This is one of the things that I take pride in, because I fundamentally believe in the exploration potential of the projects, as does our team and as does our partner. So better process will drive better results, and this is the work that it's taken to get us here. Vectoring. I mean, this is incredibly important because we had a lot of times you'd see press releases coming out from Maple that showed grade data, grade thickness data, assay data. If you don't have all of the layers of data, which we're blessed, we have 250,000 meters of drill core that's been obtained on the Douay project since the discovery hole was drilled back in the 1980s. We've got lithostructural data, we've got geochemical data, geophysical data, all of these things that we talk about, multi-element geochem, whole rock assay, surveys that have been flown, magnetics, and VTEM. Great. It's always easy to collect data. What's hard is to take the data, put it all together, and use these different layers to come up with where do you go next. Because at the end of the day, finding additional high grade within the Douay deposit is something that can also move the needle from a development standpoint. We have had high grade intercepts on our first year JV program, for example, which we'll talk about in a little bit. But some of those grades are 2, 3, 4, 8 times the average deposit grade of Douay. So it's not a homogeneous 1 gram deposit, open pit, constrained in the Abitibi. It's got high grade elements to it because it does happen to straddle this first order structure in the Casa Berardi. You got to use the data though to get you there. And then of course the additional layer of filter that needs to be put on it is what type, if the geology is permissive and it supports the kinds of targets we're looking at, does what we're trying to drill in terms of potential grade, potential thickness, does it meet criteria for an open pit mine, for a bulk tonnage underground mine, or for a selective high grade underground mine? That's the additional layer of economic filter that's being applied to this to make sure that before we even drill the hole, we know what we're going after, we know what it can potentially add to our ultimate goal, which is getting this to a $300 million plus NPV project that would trigger a back end by Agnico. This is just a snapshot of what I started with and what we started with. And this is, again, after 2.5 years of working with our partners as part of the JV, but also the previous team, doing the work, the exploration work on the ground and running their model. What you see here, what you don't see here is what's most important is you don't see geology, right? You see a lot of data, you see grade, you see assay, you see geophysics, but this doesn't really tell you very much. So when we looked at this and when we looked at it with our partner, we said, look, the way we get to a better plan, a better results out of the drill bit is to take the data and get into it, right? Roll up your sleeves. And I have a fantastic team there at site now that we've turned over, but we've brought the right people in. And so what have we done? I mean, we have gone through and systematically relogged. We've pulled holes off the rack that were from 1980, late 1980s, cleaned up the core. Some of it is oxidized. So we've gone back, cleaned up the core, put it into new core boxes, but importantly, systematically relogged it and put hand-drawn level plans, cross sections, long sections through the entire deposit so that we can vector and we can understand what's happening structurally, what's happening lithologically, and does that correspond to areas where we see potential where there may not be a lot of drilling? Does the geology support it? And lo and behold, we see things, for example, like graphitic shear zones, which if anybody's paying attention to what happened with the Casa Berardi mine to our west, which is operated by Hecla, it started out as a high-grade underground gold mine. Much of that high-grade gold was located in a graphitic shear unit in contact with the Casa Berardi fault. And so, and that's where they've transitioned obviously to underground. But these kinds of parallels and analogs with other deposits in the Abitibi, they're very important. You don't see them unless you actually go through, look at the data. And, we're doing it with a small team that's costing less money than going and drilling holes. So I think you can see the bang for the buck that we're getting out of all of this work. And when you put it all together, now you've got a plan view map here with real geology on it, with structure on it. Zones that are open immediately pop out in the 3D model. And you've got something to actually, vector, right, with the deposit scale, lithological, and structural interpretation. Now, we're not 100% complete with this, and I'll talk about this in a bit of couple of slides down the road, but, we're substantially complete. And what comes out of that data is tremendous. That's one of the things we're really blessed with that we don't get a lot of value for. If you think about the replacement cost, some of the data that we have, it's up in the $75 million territory. I just focus on a couple of zones within the deposit at Douay. These are to me low-hanging fruit for not only for future development, but and why? I mean, Douay West is where the bulk of the indicated resource is sitting. It's got minimal overburden thickness on top of it. It's actually a lot of the people that have seen our picture with the head frame. This is where the head frame sits and where our office sits. So somebody at one point decided to build a head frame, put a hoist, drill a shaft down to 30 meters because they thought that this was the potential for a nice starter operation. We agree. It's got about 500,000 ounces there, but if you note the grade here, it's about twice the deposit average. And so, if we find more of this material, that has the potential to really add to a potential mine plan starting at Douay West. You just have to know where do you go. And so, in a similar side, on the opposite side of the deposit, we've got the 531 zone, which, as I mentioned, had a spectacular drill hole in 2021, 28 meters of 8.8 grams. 8.8 grams. Think about that for a second. The deposit average grade is just above a gram. And here's a continuously mineralized 28-meter intercept at 8.8. So it's pretty obvious to all of us, we just need to go find more of that. And the potential exists. But what is it about these two? Remember, the strike length between the 531 zone and the Douay West zone, we're talking about like a 6 kilometer plus long strike length along a 55 kilometer section of the Casa Berardi. So this is still a postage stamp size of the overall land package, but these are 6 kilometers between Douay West and the 531 zone. When you start to look at the magnetic data and the structural data, some interesting things pop up, but somebody needs to go through and do a systematic structural interpretation, which we have started to do. And one of the things that pops out at us that's an interesting follow-up concept is that there is a dextral strike slip movement along the Casa Berardi fault, which shows rotation of an intrusive block, which is shown here in purple and blue. So what those pressure shadows, where the pressure shadows on that map exist, actually correspond immediately to the Douay West and 531 zone. So I'll continue with the geology. I'll save that for the question and answer period, but you can see the work that's been done. This is a picture of the lithogeochemistry. As Gerald likes to say to us, he's a phenomenal geologist. I look up to him very much. Doing lithogeochemistry studies, putting them in reports, none of it matters unless it's plotted on a map and you can see the distribution. The only thing you can see out of this, which I think is the takeaway, much more we can get into in a technical session, is you see in green here a rock type that corresponds to the sort of Douay West 531 and that general trend. There's some interesting pink rocks here that represent more of the intrusives, cyanites and alkaline intrusive rocks that exist in the Douay Northwest and the Nika zones. And there's actually a structural jog in the Casa Berardi fault interpreted there as well. So very interesting, and now can be used as a mineralization vector to go towards higher grade zones. Again, just to recap, a wealth of land, a wealth of favorable geology, most of it concentrated around the Douay resource area, but certainly high potential around the entire Eagle Tailbell mine trend at Joutel, which we now control 100%. And all of this will be described in an upcoming press release outlining the exploration update, the full update on everything we've done over the last 8 months, but also talking about our plans going forward. As I said, we're 70%-ish complete with all of this systematic review. We don't need to get to 100% before we get the drills turning again. Obviously, we want to wait until the conditions are favorable, make sure we're engaging with our local counterparts, our First Nations partners, and do the proper permitting, et cetera, with the Quebec government. So we're starting a lot of that long lead time work now in preparation for drills to begin turning again in the fall and winter. This was also incredibly important. It was one of my first priorities when I came in, trim the fat. This company had a lot of it and it needed to be cut. Overall, you're seeing 67% reductions. I expect this burn rate for the company's G&A to be down below $2 million. We've made rapid reductions across the board in areas that actually matter. Business development expenses, I do most of that. Share-based payments, salaries and benefits, investor relations. I wear every hat within the company. I have a great team who also feels similarly. We do more with less. And so therefore more money, including the money obviously that's been raised on the flow through side, it should be going in the ground. That's the way we operate. And that's the way we're going to continue to operate going forward. Just briefly on the team, many of you I haven't had the chance to meet, but I look forward to interacting in the future. Our interim CFO is Michael Rukas. He was my corporate controller when I was the CFO of the company. Josh Pelletier is our chief geologist, and Wilma Lee is our go-to. She does everything here. We're really happy that and grateful to have her support and assistance, especially with this transaction. Our board, Michelle Roth is our chair. She's from the U.S. Extensive background in investor relations, lovely person, and a very strong chair. Gerald, I've mentioned a few times, is just a very well-regarded, primarily VMS. He's got a lot of large company exploration experience and is a local in the Rouen area, kind of a legend. So we're blessed to have him. Maurice Tagami, is a long-serving director, spent most of his career with Wheaton Precious Metals. He's also an operations guy, so I think as we go forward, we're going to be relying more and more on Maurice's expertise to come up with viable mine plans that we can put in front of our strategic partner and obviously advance these assets towards some type of production scenario. Sean Charlotte and myself, and then we have Paul Harbage, who many of you may know. Paul is an exceptional geologist, has a track record of discoveries. He's currently the CEO of Faraday Copper, which is doing very good work in Arizona, but has an extensive background with Goldcorp and Randgold, and importantly has a lot of experience with these project resets. So he's been guiding a lot of this work and making sure that we can see the wood for the trees. Just last, in terms of the structure of the company, we are now at 375 million shares out. We've got options with an average strike price of 19 cents, no warrants, so fully diluted 396. We've got 2.7 in the bank, 2.7 million dollars Canadian in cash in the bank as of our last financials Q1. Just around $2 million as of today, and then the proceeds from the flow-through financing are 4.05 million, which is all going into the ground. Coverage, I think a few of the analysts are on the call today. Very, very happy and pleased that analysts of this caliber are taking an interest in our story. Michael Gray, former colleague of mine from Macquarie, exceptional analyst, as is Lauren McConnell at Paradigm, and Mark Reichman out of the US with Noble Capital Markets. The shareholders have been broken down as per today's announcement, so you can see 19.9% is our strategic investor, Agnico Eagle. 12% is institutional. You can see some of the names of the institutions here. 1.4% and growing of the individuals and insiders portion of that. A lot of that comes through my purchases in the market, and the remaining portion is retail. So in closing, just want to stress again, there's a lot to like here about Maple Gold, especially in its new iteration. Pure Canadian gold play in a top-tier jurisdiction, great infrastructure, 3 million ounces, high-grade past-producing mine trend that's ripe for exploration, tremendous playground, 400 square kilometers that we control 100% along a very important first-order structure in the Abitibi. Great partners in Agnico Eagle. Our EV to resource is just under 4 million ounces. We pretty much double our ounce count overnight with the transaction, which is still subject to shareholder approval. But trading at a significant discount to its peers. So I think it's an asymmetric, I thought it was an asymmetric value opportunity before the transaction, and even more so today. Great team, great board. Obviously the focus is on prudent capital allocation, exploration and development, and we're well capitalized. So with that, thank you for your attention, and happy to interact and take some questions.
All right. Well, thank you so much for that update and overview. We have some audience questions to start off. How long do you think it will take to get to a PFS or FS? And how does the latest funding cover the necessary exploration spend? Will the efforts focus on the existing resource at Douay?
Great question. I'm not sure who it came from, but in terms of the time it takes to get to a pre-feasibility or a feasibility, we're not guiding that at the moment. There are a couple of steps that need to be taken before we get there. Obviously, a lot of the resource that we have at Douay is in the inferred category. So in terms of the allocation of this $5.6 million, $4 million plus the Quebec mineral exploration tax credit, I think we're going to have it's going to focus initially on the Douay resource area, looking for extensions off of the Douay resource, but not the kind of extensions that we drilled when we last reported drill results. Those were described as game-changing, quantum leap exploration drilling. Obviously, the results underperformed relative to market, primarily because, as I described in my presentation, there was not only no vectoring down to that depth of the deposit, so it was literally needle in a haystack type of drilling. But without vectors, I think there's a lot more bang for the buck to each of those holes cost in excess of $700,000 each. So I think we can get, for example, if you shallow the targets, the near mine exploration potential is significant. There's a lot of white space between what we drilled in 2023 and what we intend to drill. So I think it just makes more sense for us, obviously, to initially focus on expansion potential at Douay. But I think really Agnico had shut down the Joutel mine complex in 1993. It has not seen any systematic exploration. There's infrastructure there. There's underground, shafts, et cetera. So it was a high-grade past producer that produced over 1 million ounces at 6.5 grams. I'm very excited, and we are very excited to go and take a look at not just the remnants of what was left behind in and around the existing mine outs, but really seeing if we can find another Eagle Telltale trend in what looks to be a potential stacked VMS.
Got it. Thank you. And then we've had some questions come in about drilling as well. Do you have a sense of the number of drill targets and to what depth once drilling gets underway?
Again, I would love to get into all the details regarding the exploration plan. Just suffice it to say that we are compiling the list of targets. We are ranking and prioritizing them right now. And investors can expect a near-term update, essentially with the title of Exploration Update and 2024 exploration plan, right? We should be coming out with that in the near term.
Okay, got it. Thank you. And then some questions about if the threshold is reached, is Agnico required to back in, or is it an option?
It is an option that is entirely at Agnico's discretion. So the way the option works, the back-end option works, and again, I should invite you to look at similar back-end options have been done. These are, so I believe this is the first time that Agnico has done it on an asset, but Barrick has done it with a few. Skeena, I believe, had one. I think Mayfair also has a back-end with Barrick. And then Orla, I believe, had one with Goldcorp and now Newmont. So the criteria, of course, is it's a double trigger. A pre-feasibility or a feasibility study at a minimum with an NPV of $300 million, 5% discount rate, and a pre-financing construction decision by Maple. We drive those. That's in our control. What is not in our control is what Agnico does once those milestones are triggered. They have 90 days to consider what they want to do. And should they choose to exercise their back end, they will pay $12 million plus twice the spending that we incur between now and the achievement of that milestone. So the discretion to answer the question is entirely at Agnico's in Agnico's hands.
Got it. Thank you. And then a question about strategy. Can you provide some additional color on the go-forward strategy, given Maple is now in control of how exploration dollars are spent?
It's a great. This is what I live for. Is the I'm an ex-investment banker, and so the strategic aspects. When you start with an endowment, the kind of assets that we have, the kind of partner we have, the kind of gold price environment that we're in, and a deal structure that was very creative that provides a lot of value to Maple shareholders. There are a lot of levers that we can pull on. I believe that investors, first and foremost, just given that exploration in the past failed to materially progress Douay and Joutel, I would like to see not only value-added exploration at Douay, I would like to see obviously exploration success in the form of assay results that confirm this updated and more robust model that's empirical. But I also will be simultaneously looking at development scenarios for the resources that we currently have. I think a great way to demonstrate to the market the faith that we certainly have that Douay can become a mine at some point is to put some proper economics around it, right? Because everything after that is essentially gravy. And so, if we are able to take, people can do a back of the envelope, for example, using and because we have such an amazing partner who is a miner with operations in the region. Certainly, we're not going to. You see a lot of the studies that are done, even up to the feasibility level, which are not grounded in reality. We've seen a lot of capex blowouts. We've seen a lot of projects that just started out with great intentions, but ended up, even with a favorable gold price, not quite panning out. So I think we can use some conservative estimates, not only in the gold price, but also, using our, partner helps us a lot in terms of the technical collaboration thus far has been amazing. And that's a credit to Agnico. They've got an amazing team. It helps, of course, to be a CEO that's got a technical geology and engineering background. I've stepped in during this time. I've been the interim general manager of the joint venture, in addition to all the other hats that I've been wearing. So I've had a lot of opportunity to interact with a very strong operator in the region and understand what really drives project development from their side. I'm going to get more understanding of that, I'm sure, as we go forward. But I think strategically, good exploration based on vectors, based on data, based on economic criteria, with less waste is strategy point one. A path forward to seeing development of these ounces is strategy point two. And again, I think the critical mass of exploration and capital markets expertise that we have, this company has been quiet for a while, but this is a very exciting time for us. So you're going to see updates here in terms of additions to and strengthening of management, board, technical, et cetera, especially now that we've got 100% control of these assets. In this gold price environment, I think we've got a lot of potential in front of us. I think obviously across the junior space, it's been pretty beat up, but we've been beaten up and pretty steady in our share price because we haven't been trying to push water uphill. We've been fixing what's broken. And so now marks a very important time for Maple and Maple shareholders with a new strategy going forward.
Okay, thank you. And then we have an audience question about why 300 million NPV and why is it 50% in the construction option and not 100 or.
It's a good question. I think there was some. There wasn't a lot. I mean, there was a little bit of wizardry behind the $300 million number, but I think it reflects a minimum size of project that moves the needle for a company that is of the size of Agnico, right? When you use conservative estimates for gold price, for OPEX, CapEx, et cetera, and you come up with a project of that size, it should move the needle not only for Agnico but for others who are looking for a cornerstone asset in one of the world's best jurisdictions to operate a gold mine. But there is a little bit of mental math and gymnastics that one can do with the optionality in the back end and in the JV restructuring, where, for example, if you take a $300 million project at some point down the road, you apply a developer multiple to that because we'll have reserves with a pre-feasibility or feasibility study. You can come up with a conceptual market cap for what Maple Gold should be. And if you start applying, premiums and things like that to it, you can see that there are some levers here in terms of Agnico's decision, should they elect to make it based on a quality project, to either pay Maple Gold a multiple of $12 million plus a multiple of exploration spending to back into 50%, or do something else, right? Potentially corporately, something like that. There's actually a decision to be made. And so that number, it's not arbitrary. I think it reflects both a minimum size of project. I think it's achievable. Right now, I think we're not at the stage of putting out a pre-feasibility or a feasibility study on this, but I think just, again, back of napkin, you start looking at the ounce count, you start looking at the grade, you start looking at, other inputs and costs, et cetera. I think we can get there. But the 50% back end, I should say, on the second part of that question is Agnico does have the right, if they elect to back in, they have a right to elect to become operator at that point as well. And so right now we operate and we have operated under the JV as a management committee. It's a pure 50-50. It would continue to be 50-50, but I think if we've got a viable development asset that's got a construction decision on it where we're going out looking for project financing with a partner, it only makes sense for Agnico to be the operator at that point. And so what happens from there, what happens to the remaining 50%, I should also add, I mean, we have a 2% NSR on Douay, which was granted under the original JV. They do as well on Joutel. So both of which are subject to back-end rights. I always say to our shareholders, if we are at that point, if you project, which we don't like to do, but if you look forward and you see we achieve the milestones, we achieve the success we hope to, we have a $300 million project, we have a construction decision, And there is a back end and the potential to get to 50-50 JV, which is exactly where we are today, but with a buildable project. Not only do we have value because we're partnered with the best-in-class operator who's looking to advance a mine project, but we also retain a 2% NSR on 357 square kilometers of the Douay project, which we contributed. So that's in a nutshell. That's what I think the value proposition is for Maple and Maple shareholders.
Thank you. And then question about the amount of past drilling. So how does the amount of past drilling across the Maple Douay land package compare to major, Abitibi 5 million ounce plus projects or camps?
I think in terms of total meters, we're right where we should be. I think the success of our drill programs and the we made a strategic decision with our partner to do less of the infill style of drilling at Douay and really see how much more we could add to the mine plan. So, I think it's where it needs to be. But I do think, and we had talked with our partner about this as well, for a land package of this size, it has to be success driven, of course, but it could support 10, 15, $20 million programs, 25 to 40,000 meter exploration budgets a year. I don't want to guide that because of our current size, our current treasury. I mean, that would be unreasonable. But I think we have to go out. We have to prove it. We have to prove that we have that this vectoring work, that this relogging work, the reset of the project and the company can actually generate and deliver results. I think with some success out of this next drill program and the continued backing of a best-in-class partner, I think we've got a lot of potential to take those 250,000 meters at Douay. And of course, Joutel itself had 250,000 meters of analog drill data. We don't have a lot of that core, but we've QA/QC'd it. Actually, Agnico Eagle has QA/QC'd that data, which we did when we first announced the JV. We also had done a initial drilling at our Eagle project, which we have 100% option on in 2022, which returned some very good drill results. So we have a lot of core. If anybody wants to come out and see the core, we're happy to take you, on a tour of the project. It really shows well. But I think you're going to see the drilling being very focused going forward because we need to maximize our available resources and really drive. We don't want to raise money to advance these projects in a highly dilutive fashion. We want to be strategic about it, as we have done with this deal that we announced with Agnico and the charity flow-through structure. And so in terms of the drilling, there's going to be a lot more drilling ahead and better days ahead, but we'll come out with more description and discussion on the exploration plans, as I said, in a subsequent press release.
Yeah, thank you. And question about Joutel. Why do you think Agnico was comfortable including Joutel into the new agreement? That seems like a true win because originally that property came from them, right?
It was. In fact, the Eagle in Agnico Eagle comes from the Eagle mine, which we now have 100% control of via our option with Globex. So, this is a namesake asset, and it we've had conversations with the teams at Agnico that worked on the project initially, and with the geology team to kind of look at what the potential is. Again, I described the whole reset, rethink of the project. We've put out district scale long sections. We showed plunges of mineralization. We showed a lot of things that maybe were new. Some of it was sort of presented slightly differently, but I agree with the question in terms of, I think it is a tremendous asset. I think we need to be focused. We shouldn't be looking for, just the shallow, low-hanging fruit in terms of, as I said, we're not looking for to pick off and twin holes or, just pick off around the periphery of what the existing mine ounce were. We're looking for something that can tell us that, we see some periodicity, for example, in some of the high grade there. And we know at the time that the mine operated, it was really a $300 per ounce and below gold price. And it was also, really the first gold mine and underground gold mine in Agnico's portfolio. So, responsibly and certainly with our partner's blessing, I think we'd like to get in there and explore it. Now we've got 100% control over it. So I would expect the next exploration update from us and the plans for drilling to include a certain portion of the budget, certainly on Joutel, which has a lot of high grade potential remaining.
Well, thank you. And then question about the AGM. Last year's AGM was held in June. Do you have a sense of when this year's will be held along with the vote?
Yeah, so as we said in the transaction announcement press release on Thursday, the shareholder vote, which is required for the transaction and our annual, it's going to be an annual and special meeting of shareholders. We will be mailing a circular with all the details on the JV restructuring, the option and conveyance agreement, and the matters to be acted on by shareholders. Our expectation of when that vote will be held is likely to be August, late August or early September. So that's essentially the time frame, and it dovetails very nicely with the commencement of our exploration plans for the fall.
And question about G&A. Do you have an estimate of a sustainable yearly G&A expense for the company to settle
Yes, I think it's reasonable for us to guide between $1.5 to $2 million a year, give or take. I think that some of the times that things are higher on the higher side or on the lower side depends on transactions we're working on. Marketing, of course, that's one of the things that we've been doing quietly and in a cost-efficient way. But we will be attending conferences. I just returned from a great conference in Quebec City, really just starting to retell the story and get people re-engaged. But we'll be attending conferences later this year in Colorado and in Zurich. So I look forward to interacting with shareholders and of course it does cost money to attend conferences but we don't have full-time in-house IR people. I handle a lot of that myself. I enjoy it, frankly. I like the communications aspect of the position, and again, look forward to it's easier to communicate a great story such as Maple's when we really have a good story to tell. I mean, I believe fundamentally in the projects. I've got an amazing set of colleagues and directors. We've now done the work on the project, and we've come up with what we believe is a very creative deal structure that's a win-win for us and Agnico. So now's the time to be out there telling the story. But I think just to answer again the question, sub $2 million G&A is what shareholders should expect going forward.
Thank you.
Which is a far cry, by the way, from where they used to be, which we aren't going back to those days.
Okay, thank you. And are you able to give us a sense of how much give and take there was on the terms, and if there was anything in particular that was like a closer for Agnico?
If I understand the question correctly, I would say the give and take was very much in the spirit of partnership. This was, I think, it's incredible. It's a testament to the kind of people that we have as partners, that they gave us the attention that they did, considering our relatively small size. I know they have a lot of higher priorities of things that they do on a day-to-day basis as Canada's largest mining company now, through the success of their approach. It's something for us to emulate. It's something for us to model ourselves off of. And, we are in a very unique position vis-a-vis our relationship with them. So I call it a true partnership. We were looking for ways to unlock value. This was not initiated or forced by any party on the other. This was really, and a lot of times, again, I had the pleasure of working on behalf of Agnico on some investment banking, capital markets, M&A transactions in the past. And I've certainly learned in my career, it's always better to go to people with solutions versus problems. So we also had tremendous advisors to working on behalf of the company and Fort Capital Partners. So having that capital markets grounded approach and a real understanding of the geology, of the technical merits, of what each party was trying to accomplish really helped. It doesn't happen overnight, as I said. I mean, I took over as CEO on an interim basis in August last year, became full-time in November. And it's taken months to come up with the right structure and make sure that it's properly thought. But I'm very pleased that we're here now, and I expect that productive relationship to continue going forward. If anything, this has only built a good relationship that we have with each other. I certainly respect tremendously every one of my counterparts at Agnico that worked with us very closely on this transaction.
All right. Well, thank you very much. Was there anything else that you wanted to touch on today that we didn't have a chance to get to?
No, this has been amazing, and you've been incredible. I really want to thank Adelaide Capital. I want to thank all of our shareholders for their patience while we've been, preparing and paving the way for better things to come from Maple Gold. I invite shareholders. We will put the presentation that I used today. We will put that up on our website. So don't worry if you weren't able to screenshot or capture every slide. It'll be available. And I want to say thanks again to our partners at Agnico Eagle and to my entire team, to our advisors, to all the support and the deal team, of course, the lawyers, et cetera, that helped us get here. My sincere thanks. I look forward to talking to you again. And I appreciate the chance to speak with everyone today. It was a pleasure.
All right. Well, thank you very much, Kiran. Thank you to the audience for submitting all these questions, and have a great afternoon, everyone. Thank you. Bye.
Thank you. Bye-bye.
Bye. Bye.